Good morning, Thompson family. Great to see everybody. Thank you for joining me today. Todd and Lisa, I'm so glad that you were able to make the time for this annual client meeting, and thank you for including your children this year. Thomas, Rachel, and Devin, I wanted to welcome you to this meeting. I hope you find it informational. Just to give you an overview of what we're going to talk about today, I wanted to talk a little bit about the trust history and some of the distribution details within the trust. I wanted to talk about portfolio investments, allocations, and market outlook. We have a couple of positions in the trust that I think we need to talk about in further detail. And then I also want to talk about the potential of maybe some ongoing beneficiary educational meetings going forward. So let's just jump right in. I'm going to share my screen so you can see my presentation. Okay, let's start with this first slide. I just wanted to give you a little overview about the trust itself. This trust was created in 2021 by Todd and Lisa. It's the Thomas Family Irrevocable Legacy Trust. And the intent of the trust was to capture and preserve the legacy of the Thompson family wealth for the benefit of their children and their children's issues. So that means you children as beneficiaries and your children as potential remainder beneficiaries. The intent was to create a trust that's not only providing for the children during their lifetimes, but to also create a legacy of generational wealth, which is really a lovely thing. Gateway Trust Company is the named trustee for this trust account. I am the trust officer on the account, and I wanted to give you a couple of additional contact names should you need to reach out for any reason. Jack Andrews is my client services associate, and Kate Madison is the administrative assistant on the account. So if you cannot reach me, please feel free to reach out to either of them. They can certainly help you on my behalf. So first, let's talk about some distribution details within the trust document. Thomas, Rachel, and Devin, as you're aware, you are the named income beneficiaries of this trust account. You're currently receiving quarterly income distributions from the trust. We're sending them as ACHs to your personal bank accounts. The trust language also allows for what are called discretionary distributions. And I thought I'd just read the language from the trust to give you an overview of what that discretionary distribution process looks like. The trust language says the trustee, in the trustee's discretion, may distribute to or apply for the benefit of the beneficiaries or the beneficiaries' issues or both so much of the net income and principal of the trust as is necessary for their health, education, maintenance, and support, after taking into consideration, to the extent the trust deems advisable, income and other resources of the beneficiaries outside of the trust and known to the trustee. And I know that's a lot to unpackage, so if you have questions about discretionary distributions, if you are pursuing taking a discretionary distribution for one of the purposes that are outlined in that paragraph of the trust document, let me know. We can look at what you're planning on doing with the distribution, look at it, whether or not it's in the terms of the trust agreement, and then go from there. So just reach out to me if you have any concerns or questions there. So with that, we are setting the stage for the next part of the presentation, which is an understanding of how the assets in the trust are invested. So we'll just move on to the next slide. And here I'm showing you how the assets in the trust portfolio are currently allocated present day. And as you can see, we've got about 83% of the portfolio in equity, which are stock holdings. We've got about 15% in bonds, certificates of deposit, treasury bonds, all encompassed in fixed income. And then I've got about 3% in cash, money market in the account. And we keep this on hand for anticipated distributions, trust expenses as they're incurred. So our goal in this portfolio is to diversify the portfolio amongst these assets. Diversification is a strategy that spreads out the portfolio investment across a variety of industries and business sectors so that we're hopefully reducing the volatility of the portfolio over time. I should add that there's another classification, non-standard assets, that could be included in this portfolio. The trust does hold one non-standard asset. It's a real estate asset. We're currently holding it in a sub-account, and that's why it's not showing up on this particular allocation map. Non-standard assets can be real estate. They can be closely held business entities. They can be receivables, liabilities. Like I said, we currently hold a real estate holding within that sub-account, and I will talk to you a little bit more about that later in the presentation. So let's move on and talk about the trade-off between risk and return. I believe that there might be some differing opinions within the group as to risk tolerances, which you're willing to have held within this trust account at the present time. Risk tolerance is officially defined by the U.S. Securities and Exchange Commission, the SEC, as an investor's ability and willingness to lose some or all of the investment in exchange for greater potential returns. And as we can see on the chart, higher expected annual returns include that higher volatility risk. Our differences in risk tolerance within this family could be challenging if we can't come to a conclusion. We need to all be on the same page because we have one investment policy statement for this trust account. So we need to be in alignment as to what our goals are for that investment policy statement. We're currently making investments in alignment with the IPS that's on file, which is directing us towards long-term growth. An IPS statement also includes information about time horizon, asset allocation, allowable ranges, and tax considerations. And by all means, if you would like to see a copy of the current IPS on file, let me know. I'll email that to you. And if we feel as a collective group that we want to make changes to the investment policy on file, we can definitely look at doing so and execute a new IPS strategy. So just let me know. As we talked about, we might have some differing opinions on asset allocations within the trust present day, but we do need to work collectively. All of you are currently, as we talked about earlier, receiving quarterly income from the trust. And we could set up, instead of these distributions going into your personal checking accounts, if you'd like, we could set up an investment account, a personal investment account for you. And within that personal investment account, you could set up the portfolio to whatever investment strategy and risk tolerance that works for you. Let me know if that's something, if you're interested in doing. We can take that offline and have a one-off conversation if that's something that you're interested in doing. It would be really easy. We could just change the quarterly income distributions rather than going into your checking account. They could go right into this investment account. So let me know if that's something that's of interest to you. And I also call out that looking down the road, when the time comes when both of your parents have passed away, at that point in time, this trust will split up and each of you will get a equal trust share, an equal separate trust. So then at that point in time, you will be the primary beneficiary of that separate trust share, and you will have the flexibility at that point in time to determine a portfolio strategy and risk tolerance that's right for you. So keep that in mind. So let's move on to the next slide, and we're talking about the market value of the current trust account. As you probably are aware, the markets have been up and down the past few weeks. And with that said, it's important to keep in mind that we are not investing for the short term. We have a long-term goal, and we're looking out 10, 15, 20 years out as we've set this trust up for that long-term goal. As we can see from the graph here, this trust was started in 2021, so post-COVID, and the 2022 and 2023 years were a little rough. The market was low, it was down. But as we can see, as we're ending 2024, we've seen considerable growth in this account. We went from an inception date market value of 1.6 million, and we are just shy of 3 million at the end of 2024. So we've experienced significant growth. And with that said, I think that our strategy should be the same for the next 12 months. I think that we should stay the course and stay with the current investment policy statement that's on file. However, as we all know, the market can change drastically. There might be radical changes in the market yet this year that we are not aware of present day. So if things change and you are feeling like you have questions or you want to talk through, is this the right strategy for us still? Let me know and we'll schedule a follow-up meeting to discuss that further. So moving on to our next slide, I wanted to talk a little bit more about the concentration that we hold in Walmart shares within the trust. I understand that this trust this investment has significant value to your family, as this is how you earned your wealth through Walmart. This is a directed position that we are directed to hold this concentration. So without your input, the position will stay just as it is present day. That said, I have been watching Walmart closely, and while they're still a very solid holding, their fourth quarter 2024 revenue was down. Their foot traffic was down and their e-commerce sales growth was down. As we can see on this slide that I've got up for you now, this is comparing foot traffic compared to prior years, comparing Walmart and Target as they're competing with wholesale retailers, Costco, Sam's Club, and you can see where Walmart falls in the standings. So something to consider. Now, I'm not suggesting that we would ever sell all of the Walmart holdings out of the account. What I am asking is that maybe you give some consideration to selling off some of the shares over a period of time, and then we can reinvest that revenue in other opportunities. This strategy could help us to further diversify the portfolio, and by divesting slowly, we would be able to manage any capital gains that are incurred by those sales. So give this some thought. Again, if you want to have further conversation about this, let me know. We can schedule some time to talk about it. Happy to talk about it in further detail. We also need to talk about that real estate holding that I mentioned earlier. We hold currently in a sub-account for the trust, a real estate holding that is actually a landfill holding. We have currently discovered through our annual non-standard asset review process that this landfill real estate has environmental issues, including significant land contamination. And this is a big deal. And as the trustee, I am responsible for taking care of this and addressing these concerns. So what I'm planning to do is to retain outside legal counsel that specializes in this type of matter. And I'm guessing that we're probably going to have to retain an environmental consultant to help us determine what we need to do as far as next steps. I tell you this because these expenses that we incur by engaging with these professionals will be trust expenses, and you will see those expenses reflected in your quarterly statements. When I have more information to share with you, I will schedule a follow-up meeting so that we can talk through what the recommendations are from the professionals and determine how we're going to move forward. So next steps. First of all, I am so pleased that we were able to spend a little time this morning discussing the trust and getting to know each other a little bit better. I think that going forward, we should continue to include Thomas, Rachel, and Devin in the annual client meetings going forward. And in addition, any of those follow-up meetings that I suggested might be potentially on the calendar for this year. I will send meeting invites with you as optional attendees, all three of you. And if you can attend those meetings, I would encourage you to do so. I think anything that you can do to stay engaged with what's happening with this trust will be a good thing going forward. Also, I mentioned earlier, I would like to schedule some dedicated beneficiary and educational meetings for you all. These would be individual meetings with each of you. We could talk about the trust details, administration questions that you might have, and hopefully, talk about your own personal finances and how the trust might be able to help you as you proceed through milestones in your life, and help you to make more informed financial decisions as you maneuver through life. Finally, I want to just stress to keep those lines of communication open. I am here. My virtual door is open. So if you do have questions, concerns, please don't wait until the next annual meeting for that conversation. Give me a call, send me an email. And like I said, if you can't reach me, reach out to one of my associates on my team and they can get that scheduled on our calendars so that we can schedule time and meet and discuss. With that said, and if you don't have any further questions, I will again thank you for your time today. Thank you for your trusting in me and handling your trust assets, and have a great rest of your day.